Speaking at the Federal Reserve's annual Jackson Hole Symposium, Fed Chair Jerome Powell doubled down on the central bank's commitment to ease decades-high inflation with ongoing interest rate hikes over the next several months, keeping in line with investor expectations but doing little to quell fear. Despite growing optimism in recent weeks, the Fed's withdrawal of pandemic stimulus measures and interest rate hikes this year have fueled concerns of impending recession, and tanked markets. Major stock indexes plunged into bear market territory in June as investors awaited the Fed's biggest interest rate hike since 1998, but stocks have since largely recovered on hopes that inflation has finally peaked. At one point down 23% this year, the S&P is now off 13% since the start of January. However, the economy unexpectedly shrank for a second consecutive quarter this year, and expectations for third-quarter economic growth have fallen, particularly due to worse-than-projected housing market data. The Fed will make its next interest rate announcement at the conclusion of its Federal Open Market Committee's two-day policy meeting on September 21. Goldman Sachs economists expect the FOMC to slow the pace of rate hikes to 50 basis points in September, and then 25 basis points in each of November and December, but they also see risks tilted to the upside given the possibility that inflation remains high for too long. GDP again flashes recession warning sign, economy shrank 0.6% last quarter as experts warn worse to come. Forbes Here's why the Fed's Jackson Hole Symposium isn't a big deal for investors. Forbes Bank of America warns of textbook bear market rally, predicting new lows for stocks. Forbes.